Hi, this is Randy Finney with the Right Side of the Chart, and today is Thursday, January 11th, 2018. And I wanted to do a quick market wrap, take a look at the broad markets, just brush on them quickly, move into a few developments I'm monitoring on Treasury bonds. I'll touch on gold, touch on crude oil. A lot of the things I've been watching recently, I haven't talked about Treasuries, but I wanted to bring that up in this video. And we'll wrap it up with a couple trade ideas as well as a quick update on the marijuana stocks. All right, so starting out here in the broad markets, this is QQQ. This is that 15-minute chart I've been focusing on lately. Like I said, I've had to sort of zoom my time frame down. There's just not a lot of big developments on the daily or 60-minute charts, which are usually my go-to swing trading charts. So I focused on this 15-minute chart recently. Here's that divergent high. We did get a pullback, but you can see on a 60-minute basis, we found support there at that first support level that I had, 161.58, give or take, and have moved up a little bit more. We were up today, nothing huge, and that high, it is another divergent high. Clearly, the momentum's still there, and that's one reason, I made mention. Somebody asked how sure I am we're going to get a pullback, and I said I wasn't that sure. That's why I'm not, short QQQ. It's not an official trade idea. But these are the technicals, and again, you know despite these bearish technicals, the market still there's just a bid beneath a lot of stuff. New Year rally, everybody wants to get in the market, or money's flowing into 401ks, whatever it is. It doesn't matter. The momentum's up, but we'll continue to monitor these charts. This did not erase the bearish case. I often point out on even the 60-minute and sometimes the daily time frames, a lot of divergent highs are a series of two or even three consecutive divergent highs, and that's what we have here so far. In other words, divergent high number one there, divergent number two, and divergent high number three right there so far. And do they have the potential for these divergences to be burned through, meaning prices keep going higher and these momentum indicators take out the previous highs? Certainly. But unless that happens, I'm still favoring a pullback here very soon, hopefully to kick off tomorrow to keep these bearish divergences intact. And then we can have a possible nice pullback shorting trade op, or if you want to recycle in long, if you're looking to position buy the dip, these would be my two targets. Is still my what I call my minimum downside target. And right now, gosh, where was I? I might have to go back out to the 60-minute charts. My apologies, but let's just say somewhere down around here for now. Again, let's just see what happens. If we get a reversal and we start to see some bearish technicals, some bearish candlestick patterns, some volume, and all that, I'll update this. But as of now, that's the story. Those divergences are still intact on QQQ. Let's take a look at SPY, and you'll see here the same story. Really not much different. We had a divergent high there, and that divergent high did play out for a correction. Remember, these are 15-minute charts. These aren't 60-minute or daily or weekly charts. So you're not looking for a 5-10% drop when you're trading a 15-minute time frame. The pullback is commensurate to the scope of the move. And when you're looking at bearish rising wedge patterns, you just take the widest part of the wedge. That's your measured target. So essentially that one hit the measured target. However, we have a second divergent high here. So I think this still continues or warrants monitoring for now until and unless these divergences are burned through, because I think we can still get a pullback down here. Looks something like this. Possibly, I'll make it pretty clear here on SPY. That would be my final near-term pullback target. There's a nice support shelf, and that would be healthy, let's just say, for the market. Work off some of these overbought conditions, temper the excessive bullishness a little bit right now. So pull back there if you're looking to buy a dip. I think that's the right now the best area I see right there if you get it. All of my activity today on the site was within the trading room. There just wasn't a lot that jumped out to make worthwhile posting on the front page. But again, there's enough to put it all together in this video here, and again, it should be relatively brief. This is something I've been monitoring. This is TLT. This is the long-term Treasury bond ETF, 20 to 30-year Treasury bonds. And notice the other day we fell to a very, very well-defined support shelf. By that I mean you look at all the reactions back here. This level was resistance. We broke above it briefly, but came right back down. And when we got back above it, you can see it acted as support since. So anytime you have a support level, whether it's a trend line or a horizontal price support level like this, the more reactions above and below, the more valid that level is. So when we hit it yesterday, we had a pretty impulsive bounce so far. And Now, one reason this stands out to me, if we continue to see treasuries rise, yes, treasuries are affected by interest rates, but this is also a flight to safety instrument. And very often, the smart money, meaning institutions, if they sense something, amiss with a rally, they'll start moving money out of stocks quietly, selling into strength as the retail's buying and move it into treasuries. Treasuries, gold, those are flight to safety instruments, with treasuries being the go-to flight to safety instrument for professionals. So that's that. Let's just watch it. There's still a lot of resistance overhead, a lot of supply here. So there's some work to be done. But again, so far we found support. There was even some divergence there as we made that double bottom right there from this low to this low, positive divergence. So this could certainly play out for a move up towards the top of this trading range, and then we'll just have to watch it from there. So I wanted to point that out. And on a related note, if you look at those are Treasury bond prices. Now you flip the charts upside down, you have Treasury yields, and you can see here this is TYX. I haven't had time to clean this chart up, forgive me for that, but you can see the same thing. And again, it makes sense because these are long term. These are the 30-year Treasury yields. So TLT is going to track these yields pretty much. And of course, just looking at an inverse chart. So you can see there again, 30-year bond has the yield, I should say, has bounced and failed at that level. That's a pretty key level to watch. And so what we're doing right now is we're sort of grinding sideways in this range. And let's watch for the next breakout in either direction. That'll kind of give us some clues to where we're going. And then finally, I like to zoom down a little to the 10-year bond. This is TNX, the 10-year Treasury bond yields. And again, you can see here, TNX is also reversed, just a hair shy of this resistance. You had these two, I didn't draw that line even. You had a double top right here, failure at about 26.15 or so back in late 2016, early 2017. And so far, that's where we went. We'll probably see this breakout. We all know that rates have been trending up recently with the Fed starting to go the other direction, pulling their foot off the pedal with the whole zero interest rate policy thing. And so ultimately, I'd imagine we'd see a breakout here. But then again, you never know. These financial markets, especially interest rates, have been distorted. So let's just watch this. And again, if you see rates dropping, that means bond prices are going up, and that would indicate a possible flight to safety. And I can tell you where we're probably going to go if you're a bond trader. Very nice support right here on this level, and that comes in around 23 or so. You can see a lot of reactions there. So that's could be where we're going near term in the 10-year Treasury yields. And finally, bonds can tell you a lot about the stock market, where it may be heading. They're often used as pretty good indicators if you know what to watch. This is JNK, one of the two more popularly traded high yield junk bond funds. HYG is the other one. And one thing you can see is historically, and if you can do this yourself, I'll keep this video short, go back 10 years, whatever you want, overlay a chart of high yield bonds with the stock market. There's a almost perfect correlation, at least a much stronger correlation with equity prices, stocks, than there is with other bonds, such as treasury bonds, high grade corporates, etc. And that is because the value of these bonds are, although they have some interest rate sensitivity, they're much more sensitive to the economic cycle. And so this is telling us something's amiss here. Yes, rates have been moving up, but the stock market, again, just look at SPY, look at this chart. This is a 2-year daily chart. Look at QQQ. Look at this. Look at this ramp. Now look at junk bonds. They've just gone nowhere now since late 2016. They've gone sideways. So that is a little bit of let's just say a caution sign to see the rally in junk bonds has completely stalled. Nothing to get alarmed about yet because they haven't broken down, but you can see there is pretty decent support. We need to watch this. I keep an eye on high yield credit spreads as well, which will sort of translate into junk bond prices and things like that. But I just wanted to mention this that lately, especially with this sharp rally that we've had for the last few months, the trend has been lower so far in high yield bonds. So again, it's just something to monitor at this time, as is the yield curve inversion, which I imagine most of you have heard about. Maybe I'll talk on that in another post, trying to keep this one on topic as much as possible here. All right, what's next? Let's talk crude. Okay, I continue to think that the upside is limited in crude. It started out with a really strong day today and then kind of puttered out at the end and closed flat. In fact, I'm looking, and as I'm looking at another monitor with crude futures trading, they're down on the day. They erased a very nice gain to close down just yeah, virtually flat. I'm showing a 0.02% drop on CL today. So this is what I'm looking at. We have this potential gravestone doji, or almost gravestone doji. It wasn't quite a doji, a little bit of a body there, kind of splitting hairs, close to a doji. If not, that's a shooting star, very close to a, or would be a shooting star candle. So look for confirmation. A shooting star is a reversal candlestick. What that means is if we look at, let's just look at intraday, go to 1 hour chart here. This was the gain here. You can see we had a very sharp rally in crude today. It started off, wow, big, what maybe a near-term blow off top. And look at that very impulsive selling. They faded the entire gain, came right down. There's some pretty decent support here. So going forward in the next day or two, maybe into next week, let's watch this level. If crude continues to move down, especially puts in a big red candle tomorrow, following today's candlestick on the daily, that would be an indication of a possible reversal in crude. And again, I'm not calling for new lows, but I do think a correction is right around the corner in crude, and that will also or almost certainly carry over into the energy stocks. They seem to shrug that reversal off today. I'm looking over on another monitor. XLE closed up 2.05%. XOP closed up 2.39. That's despite a flat close on crude after that big erasing of the gains during the day. So something to monitor because there's nothing prettier, if you're short that is, than a game of catch up. In other words, if crude starts moving down, energy stocks continue to rally or hold up. By the time they realize, hey, crude's correcting, you'll see a rush for the exits, profit taking like you haven't seen. We'll see a quick catch up. So I think there may be a trade setting up here to short the energy stocks for a swing trade if that's your thing. And if not, if you're long and bullish, just fine. It's a strong rally. Just maybe tighten your stops up, trail stops, at least have a stop in place because gains can evaporate a lot faster than they're built when the market, especially a strong momentum rally, turns. This is XOP. This will be one of my favorite shorting ops. We had what looked like a breakdown, and it was, but it wasn't impulsive. There was no follow-up selling. We snapped back up within this bearish rising wedge pattern, but the divergences are still very much intact. This is a 60-minute chart. This guy looks ready to pop here, this wedge I'm referring to. There's your levels, support levels all marked, and I think we come down to at least here, and that 3687-ish level, that's a 6% drop. If you were in DRIP, which is a 3 times short exploration and production ETF, you're talking an 18 to 20% pullback trade. So again, trade it as you like, but yes, the trend has been strong, but when it reverses, I think this one will drop pretty quick, just like the pot stocks, which I'll get to in a second. So that's the 60-minute chart XOP. Here's what it looks like on a daily chart. Negative divergences on the daily time frame. If you're new to the site, this is what I do. I swing these longs in short swing trades off primarily off the daily charts when I get these divergences. We were long down here, not at the exact bottom, but not far off it on XOP. Given got out a little too early, but we caught a good bulk of the run in the beginning. And at this point, you're seeing the same thing setting up here. You have negative divergence, which is about to be confirmed on any more downside. So if that 60-minute chart starts to play out like I talked about, that will translate over to this daily chart coming back in here. There's 3693. Here's a trend line. To me, that is just a golden target right there. Those intersecting support levels. If it took that long to get down there, maybe we overshoot it a little. If we overshoot 3693, then you have trend line support just below. And so far, there's quite a few reactions. So it's a pretty valid trend line. So this whole area here, this is what I'm looking for a pullback, and I think it'll happen sooner than later. Sooner than later could be days, it could be a few more weeks, but I think somewhere in between there, I think within the next week or so here. Okay, I said I'd, transitioning over from a momentum rally to another momentum rally that we've had. And this has been the king of momentum rallies recently, the pot stocks. MJX, not the first to market ETF, but it's the first US one. They have HMMJ.TO, I think is a symbol for the one that came out about a year or so ago on the Toronto Exchange. But now the U.S. investors have one, and it just took a lot of money coming into it. And as I mentioned, the pot stocks were already rallying. I talked about this chart before. Everything to the left of this chart. Everything from this point over, disregard. This ETF, this company invested in high yielding Latin American real estate. So the price action here is completely irrelevant. So you really need to get away from the daily chart, but you can see the volume. I don't know if you can make it out on here. I have my volume bars muted down a little bit. I don't like too many bright colors, but there's huge volume coming into this thing. There's been a lot of people. My guess is a lot of people aren't comfortable with individual stocks or penny stocks, these low price stocks. We've been trading these for years. And I'm surprised, honestly, that it took this long for an ETF on the U.S. market to come out, a marijuana ETF. But either way, that's that. So what you need to do here is really look at the intraday charts. This is when it started out as a marijuana ETF. You can see just huge volume into that. And we zoom down to the 30-minute chart. I mentioned here, this is a pullback target that I'm looking at, or a key support level about 34.19. If you can make out these bars on the left, that's some volume at price histogram. So people started buying here, but this volume at price histogram, these big bars, these green and red bars over here show you that this is where the majority of trades occurred, above this line. And that these volume at price histograms are useful in identifying levels of support and resistance. You can also see there's some reactions there as well, and that's a level that I'm targeting. I mentioned shorting this one the other day and adding to it recently, and that's where I plan to. I'll probably cover a little shy of that. Wouldn't be surprised if it overshot it on the momentum, but either way, I think that's a good area. If you are looking to get into this one, I've been warning repeatedly, stay away. Don't chase them when they were up here. You can see the divergent high. There's negative divergence, and that divergence has played out so far for a pretty decent drop. Off the highs in just a couple of days here, this thing has dropped about 9%. That's a pretty decent drop for an ETF. But there it is. And I wanted to make mention too that I put together recently a list of the top holdings. Uh, most of these you'll have the same symbol twice because, as you guys know, marijuana is still legal at the federal level in the U.S. So there are some companies that have some dealings with that industry, but as far as the growers and distributors, these are not American companies. They're mostly Canadian companies. So you'll see, for example, HCBTO. This has been one of my favorites for years. Aurora Cannabis. That's the shares that trade on the Toronto Exchange, and here's the shares that trade on the U.S. Exchange. So the charts will look similar, and I just want to mention I have them both in my list. But what you can look at here is the percentage that they've dropped today: 8%, 5, almost 12. Only one of them was positive today, and that was just let's see here. Actually, no, it's just shy of resistance up there. But either way, you can see a lot of selling. Here's one down 16, almost 17%. Another one of my favorites historically was TWMJ, and these still are favorites longer term. I'm just looking to buy these back cheaper. I mentioned closing out the last of my long-term holds on these positions in the last week or so, and even going to a short position with that ETF, as well as my former favorite ACBFF. There it is. There's the chart. You can see, again, go here. You can see it on the Canadian shares. Negative divergence. It's the first time I've seen negative divergence on this stock on the daily time frame since I was buying it back at 55 cents. It was an official trade on the site back then at 55 cents, and now it's at 12.25. Recently hit almost, I guess it did get up to about $15. But negative divergence here, and I would not be surprised to see this stock come all the way back here, down here to that 690 level, at least back here, that reaction high about 861. So I can just tell you this now, regardless of what happens, even if they punch up, make a new high from here, the pot stocks, I have no interest in buying these. If it takes a year to step back in, or if it takes 6 weeks for them to get down here, I'm near-term bearish on these, and at the very least, I'm not going to chase these on the long side right now. So that's ACBTO. A couple more to look at just to kind of run through the charts. And I talked about this a lot. You can see a lot of big red candles in these stocks as I go down the holdings. And what I referred to, and I've been talking about this for a while now in the trading room a lot, is this is like a game of musical chairs. This is a momentum trade. And as long as the momentum is going up, great. But I've traded these stocks for years, and when the momentum breaks and you see a lot of red candles, not just a quick pullback that gets bought up, you're seeing impulsive selling now. And there's still a given. There's still a few that haven't broke, but there's a lot that look like they're breaking, and you don't want to be the last guy holding the bag when when the momentum stops in these stocks. So that's that. INSY, that one actually pulled back to support today. If I wasn't near-term bearish on the sector, I'd be stepping in here. And be honest with you, I wouldn't be surprised if this one bounces. That's a very well-defined support level. You can see that line that I've had there. Went up here. These work well to the technicals. This was a line I've had on this chart for a while. Ran up, hit that, back tested this trend line, fell right back to support. And again, it may bounce, but if it gets caught up, this one is a top holding, and that's the problem being a holding in an ETF now that has more money in the ETF than these individual stocks have. Not obviously not collectively, but individually. So when the ETF comes under selling pressure, if you have investors, those that got in late at the top and they're already underwater, if they start to sell, then you get forced selling, and the good are going to go down with the bad. So it cuts both ways. It's good when when there's inflows into that ETF, but when the ETF starts to experience outflows, and they don't have the cash on hand to meet those redemptions, money's coming out of here. All right, that's it. Just to show you a couple more. Again, I'm just clicking on the list. You can see the names down below. These are the top holdings in that ETF. This one is the top holding, Kronos Group, and you can see pretty impulsive selling so far. I can't really put the nail in the coffin in this one yet. There is some support right there, so if it bounces tomorrow, great. It's some pretty decent support. Probably see it better on the 60-minute chart. There it is. But again, the story is the same. Look at these divergent highs. Divergence on the 60-minute chart, and it's really walking the line right now. I don't have a well-defined trend line, but again, being the biggest holding, I think we should keep an eye on this one. It looks like it is just cracking below trend now, but if it takes out that 869 level with conviction, then I think this one's heading lower. Gold, not much to say on gold. I've covered that extensively recently. It hasn't gone anywhere in exactly 1 week. Here's a high a week ago, so we're still below where it was a week ago. It's getting close to that level. And like I said when I did the last update, I could see the possibility of one more marginal new high, and that would be about it. And being that we're this close, I'd actually be surprised if we didn't make it. It's just from my experience. Usually when a security gets this close to testing a previous high, especially during a bull market or a strong run, it's going to take that high out and then reverse, because this one has negative divergence here on the 60-minute chart. You can see the divergences. So any more upside, a little bit more, pop out the new highs here. Wrong tool. I'm trying to use the arrow tool, and then reverse. And that would give us negative divergence, and it would also take out this uptrend line we're looking at here. That's GLD, the ETF on a 60-minute time frame. Here's platinum 60-minute chart. This is a platinum futures, actually. Nice price channel. It's working its way up. Look at this strong divergence there on platinum. I know I just transitioned to precious metals. I should have covered NQ. Here's NQ on the futures. NQ are the E-mini futures. This is a 60-minute chart as well. Same story as I covered really on QQQ. There's that divergence as we make this marginal new high here. So there's still divergence, and I'm still looking for a reversal soon. Again, nothing major, but a pullback, at least a mild pullback. To now we're a little bit higher, so from this point maybe we'll call it almost 2 to 3%. Or even a little north of 3%. Gold, 60-minute chart, futures again, gold futures. It's sort of a sloppy trend line. Prices have moved through this one. I'd have to move it around a little bit, but you can see we had a divergent high here at that high, and so far it's started to pull back. We still have divergence. If I draw a line out here, again, same scenario I covered a minute ago. Any new high in gold in the near future will be a divergent high if we get it, unless we really just blast on through here and take out these previous reaction highs on the momentum indicators. Okay, enough bear speak. I'm sure a lot of you are tired with that. Let me show you some of the things I do like right now for longs. XLU, as I mentioned in the video yesterday, was stopped out. As I was doing that video, it had just cracked below that 5086. I need to do an update on the front page. Haven't done that yet, but again, go with anytime I post trade parameters, stops, price target, unless I've come in before it hit that stop or price target to revise those, that is the official trade. So that trade stopped out, but I still very much like this. Here's that falling wedge. It's working its way. It's pinching to the apex of that wedge. We're about to, looks like we're poised on any upside tomorrow to get a bullish crossover here to confirm this positive divergence on this 60-minute chart. I still very much think the utilities are coming up here to this 52.54 level in the coming weeks. Daily chart, what happened here, and maybe I should have given it a little bit of room. I talk about this a lot. If you follow the site for a while, I talk about what I call momentum fueled overshoots, and that is when you have a security, an index, a stock, an ETF moving up very fast or down very fast. This is, a lot of momentum, a lot of velocity to the downside. You had a little bear flag right here, and then boom. So this thing was in a waterfall, near vertical sell-off. And what tends to happen very often in those situations is you have what I call a momentum fueled overshoot. Because of that downward momentum, you slice through support only to reverse shortly afterwards. Same thing in reverse when you have a very strong rally to the upside and you have a very well-defined resistance level where I'm, expecting, or the charts indicate a reversal. Prices will punch on through there only to reverse shortly afterwards. It's that momentum that carries it through. So we're deeply oversold on the utilities. This was a very decent support shelf. We're below it now. If we continue lower, I'll say this now, the next support's down here. I don't think we get there without a snapback rally. But if you look back, as I'm drawing this line from where I started that, look at all the reactions above and below. And that's down around 49.80ish, it looks like. So if we get down there, if you held off or you want to average in on these utility stocks, I think that'd be a good buy point. Even if they're dead money, you get paid to wait. This is yielding 3% right now. So again, looking for a bounce trade, not looking for a long-term trade. There were some big divergences at the highs, and all I'm looking for again is to play a bounce off support and maybe get out of those and wait to see what happens with the chart and find a better time to re-enter. Okay, a couple more here and we'll wrap it up. GE, I covered this one. I actually meant to cover it in the video, yes, or should have covered that in the video, but right afterwards, I posted it below. I believe I posted a chart. Been watching and liking this one for a while. With the story on GE, well, besides everything that's happened, I can't go over the details on the fundamentals right now, but you had a sharp move down. We set up in a bear flag, another thrust down. We hit that bear flag measured target, which is that white line I had there almost through virtually the penny right there. So the pattern has played out, the technical measurement of that pattern. GE took a while, was sort of basing around here, and then boom, we moved up. And as I mentioned, it'd be bullish once we took out 1862, and we did. We took that out, and we followed through today. So far, so good on GE. And again, targets. Somebody asked me, and I had meant to follow up, and I haven't done it yet to get some targets. But I think the first stop will be somewhere around the bottom of that bear flag range. It's not super well defined. We might even go all the way to the top, but that's, call it around $20, maybe a little shy. So if you're just looking for the quick bounce trade, and I can say this, I don't see a lot in the charts that say the bottom is in on GE. Just a bounce, initial bounce trade. I don't see a lot here. I'd like to see divergences. I'd like to see some other things in the daily and weekly charts, but at the very least, it's been good for a swing trade. And it's possible the bottom is in, but it may need to work off. Or at least establish a basing pattern here for a while and grind around before it breaks out. I'd feel a little more confident for a long-term swing trade or investment if this stock based for a while, and I could see a stronger case to go long for a multi-month swing trade in the charts or even a multi-year swing trade. I don't see that yet. I just wanted to make that clear, but near-term upside does look good right now. Last long trade idea I'll cover. I posted this one this morning in the trading room. I had a price alert go off right here when this one broke out, and it followed up on that breakout. So far, volume is suspect. I want to say that. I'd like to see better volume. I'm not too impressed with the volume this one had today, but price-wise, it was a pretty impulsive breakout. If it follows through tomorrow, that's my first target, 223. You'd obviously these are actual resistance levels you'd want to set your sell limit order just a little bit below that, maybe 219, 220, somewhere around there. And if it takes that out, I think it might head up here to 236 area. And over time, as the chart continues to firm up, these are longer term targets. But right now, I don't see a very strong case to do anything more than a quick bounce here. As you guys know, I have my concerns about the energy sector. So any of these Johnny come lately stocks like this one that are just now breaking out, little late in the game in my opinion, so take it for what it's worth. Just a quick bounce trade is what I'm looking at. Okay, let's wrap it up here. This video's gone a little longer than I wanted it to. Hopefully that shows you some of the things that I'm looking at here, and I'm looking for, trade ideas have been unusually light right now, at least the official ones. I'm posting as many unofficial ones, and some are working out well in the trading room, but it's tough. The broad market has grinded higher, so there's not a lot of objective entries. The trend has been bullish, but I like to see breakouts, support levels, resistance. If I'm going long, I like to see a pullback to support or a bullish continuation pattern or a breakout such as this. So, well, I'll continue to comb through the charts, and I'm sure there's something out there. And the next sector, next opportunity, I do think, like I said, energy. We may have an opportunity here soon. Gold, just kind of taking it easy on that one right now. And anything else, I'll do another video or follow up with some static posts. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.